Hi, welcome to another interview in our CEO series here on L.E.A.R.N Invest. So today we have the pleasure of speaking with Gary Peart, the CEO of Mayberry Investments Limited. So there's a bond IPO prospectus out now that came out sometime last week. So we actually just did the review. So I'll share the link to that video in the description. Feel free to check that out. But this interview is going to be primarily centered around questions around that offer, but we may actually touch on some of the other aspects of the company as well, such as the future outlook, how things are shaping up maybe in this climate, what's Gary's perspectives on how they can manage and navigate the space right now. We'll be taking your questions as usual, so feel free to post them in the comments. Let us know anything that comes up that you'd be interested in asking Gary about. So thank you in advance for being here. Be sure to like the video. Let's get started.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn Grow Invest.
All right, welcome back. Thank you for being here. So as we are a faith-based community, we typically open with a word of prayer. So I'm going to do that now. Thank you, Lord, for this day and your many blessings. We pray that this will be a meaningful discussions and investors will be left armed with actionable insights that can allow them to make informed decisions. So we thank you again for the opportunity to meet in this way as a community, and we pray for your many blessings. In your name we pray. Amen. All right, so thank you so much, Radcliffe. Thank you for being here. I say Orville saying this is not Khalila's show, but I mean, that's fine. Definitely tell me where you're joining from. I know that's something that we normally do. We actually have not been able to engage with you in that way much anymore, but please do tell me where you're joining from and if it's your first time here. And also please join me in welcoming Gary to the show. Gary, welcome.
Hi, how are you doing?
I'm good. Thank you so much for accepting our invite to be here. I know you probably have a busy week ahead of you.
Every day is busy, my brother.
I imagine so. Yeah, let's start with a little bit in terms of an introduction of Mayberry Investments Limited. That's where we usually start, and then just a little bit about your background as CEO of the company.
Sure, no problem. Mayberry was founded in 1985. We're celebrating our 37th year, going into our 30th year in business.
Yes, congrats.
We are welcome. We're a financial services company. The only thing we don't offer is a checking account. So people know us a lot about equity, but we generate a lot of our income from fixed income investments, fixed income instruments, which is going to be the topic we speak about today, the bond IPO. And so we've been around. We've probably done most of the equity listings that we see out there. We also know carving out a space on the bond side. We're also foreign exchange traders via our Cambio. We're a primary dealer for the Bank of Jamaica. We represent different firms. We can invest in the foreign markets through our different platforms. So we have significant solutions. As investment managers, we also offer pension funds. We have one of the best return in values for individual retirement pension schemes. It's an area, it's an area that we've done a lot of. As I said to somebody, if you rate us as an investment manager, that's the biggest thing that's required for your pension. So most of the pension funds out there have an investment manager, and Mayberry is rated as one of the best investment managers out there. And we've been providing that services for certain pension funds for a period of time. So we continue to move from strength to strength. We have our niche, and the thing about it, the thing that people know us much about, which is the equity market, we actually make significantly more money in the bond market, and we can talk about that later. As for me, I joined Mayberry in 2007. This is my 15th year. That's 13, and yeah, it's been a while. I guess I'm older. So I've been there from 2005. And since then, we've grown the company. The company has grown pretty nicely. One of the biggest achievements, we started our offshore investment portfolio, 10 million US, sometime around 2007. Just before COVID, it was about 150 million US. Now it's probably about 120, 130, or about 20 billion Jamaican dollars. So that has done very, very well. The value of the company has grown pretty well. So guess for that, I'm still around, eh? So I just have to keep growing.
I guess you're doing a good job, right? I guess so. All right. So
I'm
it's
still here.
interesting. It's interesting because Mayberry is actually so this is typically a question I will ask later on, but I think it may make sense here. What type of clients does Mayberry typically have, right? So for all of the ranges of products and services that you just mentioned, who are some of your clients?
I think we broke up.
Yeah. Is that better now?
Yeah. You're asking something about a question you typically ask.
So I was asking. So based on some of the services and products that you just mentioned, who are some of Mayberry's target clients in terms of services? I know you mentioned the pension fund, so that would be pretty straightforward. Yeah. But who would be Mayberry's typical client?
Well, our minimum account balance is $1 million Jamaican dollars. Which is why we're so excited about this bond IPO, because it creates an environment where customers with amounts below $1 million can become a member of the Mayberry family. Because the bond IPO starts at a minimum of 20,000 Jamaican dollars. Yes. And I think the value that we've put out there on the bond should be exciting to a lot of people. So we're actually looking forward to all of these new relationships that we'll be having. And looking at a new way of distributing our products. So one of the biggest strong points of Mayberry is our ability to originate transactions. And, over the years, we've always originated a lot of transactions, but depended on other, for want of a better word, wholesalers to pass those transactions to the average man. So an equity IPO is how you get to the average person, and we sat down and said, hey, why not do the same thing for a bond? So now we have our bond IPO via bondmayberry.com.
That's actually a big deal, I think, because a bond does seem to be usually out of reach for the average investor, and not every investor has a temperament for equities, right? They prefer something a little bit more stable, and so I definitely think that's a great move. Definitely.
Thank you.
All right. So in terms of the offer, so in at a very high level, why the offer? How are you planning to use those proceeds, and just any other relevant details about the offer?
So the key point about the offer, it's approximately 1.2 billion. It's spread over 3 tranches. Interest rates vary over the 3 tranches, starting from about 9.25% up to 12% for 3 years. We think the 12% for 3 years is very, very good value. The beautiful thing about the bond, as you've said, and as I've said as well, is that Mayberry has done billions of dollars of bonds in the past, but we usually rely on wholesalers. I refer to them as wholesalers, but there'll be other financial institutions with a larger footprint that Mayberry would have. And one of the feedback we got from individual investors is that, if I typically came with a bond, let's say 10% as a figure, I would sell, a wholesaler can access it at 10%, but then they're probably reselling it to the average man at 4 and 5%. So here is the opportunity now. If you look at what you're earning on your investments out there, it's very unlikely that you're getting anywhere from 9 to 12% on your investment. So we think it's a huge opportunity for the average person to come into this market. The bond is secure, and more importantly, it's going to be traded on the stock exchange. So that creates an environment where if somebody wants to come out of the bond earlier than they wants to structure that vibrant trading secondary market, they should be able to do that as well. And that's the part that we're really, really very excited about. Because so far we have not been able to create a very liquid and traded bond market. And that's our expertise. We've been able to create liquid markets for a lot of different equities that we bring to market, and we think we'll be able to do the same thing for the bond market as well. So if we're able to do that, the average investor gets to invest in higher yielding instruments, and at the same time, if you
All right, I think we might have lost you just for a second there. So
Yes.
Just repeat the last sentence, and I think we're
so,
good.
so the point I'm making is that with the liquidity, in addition to taking advantage of your higher interest rates, you'd also, if you have not planned properly, you'll be able to take advantage of the liquidity and come out, which I think is the exciting part of this bond.
Definitely. Great. So you mentioned in your prospectus a use of proceeds. We actually just did review, but I would say it's a little bit vague. Can you explain how you're planning to use the proceeds of the bond raise?
Well, I mean, I think it's pretty clear. The primary use of proceeds is to grow our margin book. So at Mayberry, again, in creating a liquid market, it's the ability to be able to borrow against liquid securities. So in this instance, we have a huge business in lending people against the stocks that they buy.
Yes.
And because of the nature of stocks, we can charge a higher interest rate. So right now we're charging an interest rate to the customer that wants to borrow against their equities of around 15%. And obviously, if we're borrowing at a maximum of 12, we can cover the cost of the 12% and make 3 points. As a broker dealer, we always have operated at a much smaller spread than a lot of our peers. So we're fine with 3%. And I mean, that's on the high end of what we're asking for. At the lower end, it comes in somewhere around 4 or 5%. So the blended cost, in terms of what we're going to lend against, we should make a reasonably good spread. In addition to that, I mean, we're also, how the prospectus is structured, once we can secure it, so once you secure the cash, etc., you should be fine. As you know, I mean, as a preeminent deal maker in the country, we always have deals coming through our doors. And there are several potential opportunities that's there that we can use to finance that would always give us a return that exceeds the cost at which we raise these funds for.
Okay. Any opportunities you're able to share right now?
Of course not.
I had to ask.
I know you had to. You had to ask, and I had to answer. But
Okay.
the simple reality is that in terms of how we've run our business, we think now is the right time because we've come out of COVID. Whilst we've seen an increase in interest rates, our projection is that interest rates will start to abate and may start to go back down in another 12 to 18 months. And that's why we've structured the bond in this way. So you have a bond as short as 13 months and it goes all the way out to 3 years. So the predicted interest rates is not an exact science. But on the balance of probability, we feel interest rates will either maintain here or start to trend lower over the next 12 to 18 months. So I believe a lot of value is in the 3-year paper at 12, because if our predictions come through, then interest rates will start to fall by the time you get to year 3, and you'll benefit significantly. For us, we're willing to take that risk because if we're not right and it starts to go higher, then 12% could be a good rate at that point in time. But to date, so far, based on what we're seeing, we think that will hold because the fundamental driver of interest rates is inflation. And you'd have heard what the Bank of Jamaica came out and indicated the other day that they're taking a pause. It doesn't mean that this is the start of a downward trends, but they're pausing to see, how much the interest rate increases and other things that they've done has impacted inflation. So we're optimistic that it will be positive, which, as I said, will contribute to a reduction in rates. So, if it does come out as we predict, that 13-month tranche, puts us in a good place so that when we refinance in 13 months, we probably can get it at a lower rate. But again, if it doesn't work out that way, it allows us to get interest rates at wherever they are at. to plan accordingly. So at Mayberry, we push the mantra of diversification. So, you can choose between 13 months all the way out to 3 years, and obviously you're rewarded for going longer. But some people have plans in a year, some people have plans in 2 years. So we've given you that opportunity to take advantage of it.
Okay. So Elaine is asking from the comments, do you have the power to recall these bonds?
She needs to define what she means by recall.
Okay. It's actually Elaine, can you explain and let us know? Alex is asking if you can apply via JMB Moneyline.
Yes, so we have several selling agents, of which JMB is one. I believe Sagicor and Proven are also on board as well. We don't have all of our other financial services companies on board. It's a finite amount of them, but again, the prospectus speaks to them. Okay. So I believe once JMB is on board, they'll be able to participate. But even if you're not an authorized seller of the bond, your institution, you can still apply through your institution. So once you have a JCSD number, you can still apply. So whether your funds are at a commercial bank or a securities dealer, you can still fill out the prospectus. And once you have a JCSD number, you send in the funds with that identifier, and you should be fine.
Okay, great.
And the key point, everything about this bond is electronic. So you send in your funds electronically, your account will be credited electronically with your interest, and also upon maturity, your funds will be returned to you electronically. So there's no paper involved. All the onboarding is electronic and online.
Very, very happy to hear that. I've seen that trend with Mayberry over the years. I've done quite a number of IPO applications using your portal. Very easy to use, and I like the move to making things definitely all digital, right?
Yes.
So, yeah. Elaine is asking what will happen if you're unable to pay interest for a particular quarter.
We'll not be unable to pay interest for a quarter.
All right.
We'll be having bigger issues if we get to that.
Yep. All right.
So back to the first question. I don't know if the guy had I don't like to leave unanswered question. I don't know if you had defined what he meant by recall, because I did not want us.
I see more information here. I think he's saying retire or pay off the bond before maturity date.
So he's probably speaking about if there is a prepayment option. And if there is always a prepayment option in there. But because of the short nature of some of the tranches, it's very unlikely. So yes, these types of bonds always have that feature in there because you don't know what will happen.
Yeah. All right. I think this one was already answered already. Lance. So Lance was asking, can other brokers buy in for clients, or do we have to make an account with Mayberry?
Right. You don't need to have an account with Mayberry. It's also not just restricted to what you refer to in your question as brokers and investment companies. You can also use the commercial banks, etc. You just give them instructions and the funds will be transferred. So the beautiful thing about this bond is that the Jamaica Securities Central Depository, which is the JCSD, is the entity that will hold all of the proceeds initially, and then turn them over to us, and they oversee the entire process to ensure that we act in accordance with what the prospectus has indicated and the bond has indicated, and all your payments will come.
Okay.
Yeah. Once this distribution proves to be a success, it's very likely that you'll start to see more bond IPOs going forward. So as I said, the beautiful thing about it is that the Jamaica Stock Exchange, which is an independent third party, holds all the information relative to the bond as the registrars, etc. So we just act in accordance to what we said in the prospectus: invest it, pay you back your interest, pay you back your principal. And in the future, if we're going to go again, we can refinance it or we pay you out fully.
Okay. All right. Thank you for that. So I have a question here from someone who would like to remain anonymous. They would like to know, they would like for you to explain the restructuring that MIL is going through in plain terms. What are you doing exactly, and why is this the best way to do it? And when will we hear an update on the process as to when you expect it to be completed? So that's a question.
Is it fair that an anonymous person can ask a question? I don't think that's fair. Least they can do is tell us what they're about. Because we're talking about a bond IPO, and then we're going to Mayberry Restructuring. Person must have a name, unless it's you asking the question.
No, man, it's not me. Okay, so let's say it's John Brown. I think that's a good anonymous.
No, I mean, that's not fair. I mean, come on, we're all friends here. We don't have to hide. You know? I'd love to know who's asking me questions. I have no problem answering questions.
So let me find out from them if I can share their name privately. So I think they don't mind you knowing privately. They just didn't want it to be shared. Their name to be shared.
I think it's a good question. It's a question I'm definitely going to answer. But I'm just curious. In this investing
I'll let
world,
you know who it is privately once I give permission. But yeah,
sure. Tell them once you give me permission, I'll answer.
All right. So let me ask them now, and we can maybe go to another question in the meantime.
Sure.
Okay. All right. So let me take some other questions while I wait for them to answer. Limitless Podcast is asking how low can MIL's PE go? I don't know if that's a question for you or not.
No, I mean a PE goes up and down based on how the market sees it. The lower it goes is the more stock I'll buy. So one day somebody's going to get up and realize that it really shouldn't be trading at this PE. And that's the beauty about investing in value companies. At some point, the market will recognize that the PE is too low. And at that point, we just hope that you have the stock because you benefit significantly.
Yeah. Agreed on that point, definitely. Alex is asking, what's the tax on the interest? I think that's what he's asking.
So again, withholding tax on interest is 15%. It wouldn't. 25%. It wouldn't change. It's in keeping with similar other bonds.
Okay. All right. So the person said I can share their name privately, so I'm going to text you their name. Oh boy.
So should I answer them privately?
Well, I think everybody could benefit from the answer. So
yeah, no problem. I'll give her I'll give the answer. Oops, hear me about give her the answer.
Yep. So
how am I getting it? How will I get it?
I sent you their name over WhatsApp.
Oh, you did over WhatsApp?
Yes.
Oh, but, so I've come out and check.
The name is not relevant right now while it answers.
No, I love to hear these names. So the long shot of the story is hello?
Yeah, you pause for a second and continue.
Yeah. So fundamentally, the central bank wants to just focus on who its licensees are. And within a group structure, especially with different limited liability companies, we've seen over time companies have grown and gone into different things, private equity, real estate, etc. And in essence, the regulators prefer a structure that if they have to ask questions or come into a company, they want to be able to deal with the company that has a specific license. So how Mayberry is structured right now, that company is at the top of the group structure. So if we refer to Mayberry Jamaica as just that, Mayberry Jamaica Limited, right? Mayberry Jamaica Limited holds all the different assets within the group, and Mayberry Jamaica Limited is effectively the group company at the top of the group holdings. All we're basically doing, we are restructuring and creating a different group company where the regulated entity, which is Mayberry Jamaica Limited, will become a subsidiary. So all of the other activities within the Mayberry group that is not current, that does not need to be regulated, will now be a part of the group and doesn't fall under the regulatory umbrella. So it actually makes it much easier for the central bank and the other regulators to carry out their functions. And in that way, it's also the new international norm. And so in relatively short and hopefully simple words, that's what it's about. The process of doing it, you have to apply to a court, and you're at the mercy of the courts to give you a date. So you have to go to the court, petition the court, they give you a date, you then come back and have what is called an extraordinary general meeting, or if you're lucky, you twin that meeting with your AGM, which would be cheaper. There's a cheaper way of doing it. So instead of having an AGM and then having an EGM, you try and put the two of them together, but it's not necessary. It's more efficient and ideal, but it doesn't have to happen. Once you get the approval at that meeting, you then go back to the court and basically say, hey, we have done this, our shareholders agree. And at that point, the court would grant you an order. And then you go to the company's office. They say, okay, fine, you can do all of these things. We restructure it and we continue business as usual.
Okay. So based on those steps that you outlined that were very clear, any particular timeline or estimation as to the completion of those steps?
Well, I did indicate that, it's at the discretion of the court. So we're
your best guess as to how long.
Well, I can't, because my original best guess was sometime in October. We're now in November. So, there's a lot of documentation and moving parts that need to be pulled together. Put it this way: ideally, my best wish is that it all gets done before the end of the year. But my philosophy is that I really don't cry over things I can't control. So whenever the judge gives a date, we'll accept that date and do our best to do it as quickly as possible and go on. But the key thing with the restructuring is that all our current shareholders will not see a loss in value. So you basically will have, if your value is $100 before, after the restructuring, your value would still be the same.
Okay, and I think there are definitely investors who will be concerned about that. So Thank you for that clarity. All right, so Limitless Podcast is asking, can we look forward to any acquisitions this year or next, given the restructuring?
Acquisitions are always a part of what we do. So whether we're doing the restructuring or not, the restructuring is just really to fall into line with international and regional best practices. And, so in our line of business, we always are looking for value. So the moment we see value, we'll even if I had one right now, I couldn't speak to it because it'd probably be under a confidentiality agreement anyway. But what I'll say, that's back. I think the initial question they asked about the PE. A lot of people don't fully understand how Mayberry operates and the value that Mayberry creates. So we are in the business of acquiring and selling segments of companies, part of companies, private equity companies. So one of the challenges I think that some people have out there, they look at dispositions as one time. And so, we have assets that accrue value over time. And then when we exit, that's when you get that huge windfall and cash flow. But some people look at it and say, hey, it's a one-time thing, it can't reoccur. But that's our history. That's what we do. So over the time that I've been here, the amount of acquisitions we have made, sold, made money, invest again, and then continue making money. That's what our business is about. It might lead sometimes to lumpy results, but what you have to do is, average them out, and you will see that Mayberry has been creating significant value. So if you stop for a second and think about it, right? In 10 years ago, the book value of Mayberry was somewhere around $2 to $3 billion. Today it's trending to north of $20 billion. So the value is there, And, people just stop and say, but hold on a second, nobody stop and say, how did you get there? It don't just appear out of thin air. It has come from profits, reinvestments, and more profits from those reinvestments. So we're just we're different company structured in a different way. And it's in a space where some people don't fully understand it. But for those that do, there will come a day when everybody understands it, and it will be a nice, happy day.
All right. I hope Limitless is happy with that response. Limitless is also asking, are there any IPOs? Well, how many IPOs are you planning for next year? Or I guess for the remainder of this year and next?
Well, and again, the IPOs are dynamic. You're always speaking. IPOs, is a creature of individual owners. So today they want to do it, tomorrow they change their mind. So I can't sit here and say to you, hey, it's going to be 10, it's going to be 5. What I'll say to you is that when we see an IPO that has significant value, we will be behind it. Because again, if you look on the track record of the IPOs that we bring to market, they have given very, very good returns. And a part of that is because we spend a lot of time analyzing what it is that you, the investor, would want, and try and balance it with what the promoter or the owner wants as well. And, if we can't balance that equation, we prefer to step aside. And,
okay.
So far, knock on wood, and thankfully, the majority, if not all of our IPOs have been very good. And I think we have developed a track record that when you see Mayberry come to the market, value is going to be had, just like our bond IPO and bondberry.com.
All right. So thank you for that. So let me see if there are any other questions here. So there is a question from Alex, is asking if investors can exit the bond before the maturity date without consequences. I think you'd have alluded to that before, but you can go ahead.
Yeah. So I'd spoken to it. There's no guarantee that there won't be consequences. I don't like the word consequences, but I think that what I would say is that there's a cost. So what we're trying to do, because again, this is the ethos of Mayberry, is we're not just trying to issue the bond. You invest in the bond and you wait around until the bond matures. We're trying to create what is called a liquid. Yeah, so that's how we're going to answer Alex's question. Once we create a liquidity in the market, and whilst those are terminologies we throw around in my ecosystem, what it means is that we want to create a market which is people wanting to buy and sell every day, for want of a better word. That if they want to come out earlier or they want to buy into the bond because the market has changed, Mayberry is going to create a market to be able to facilitate that. There's no guarantee that you'll come out at the price you want, but once we've created a liquid enough market, what you will find is that what Alex refers to as a consequence and I refer to as a cost, the cost is likely to be less. And in some instances, if, for example, my prediction is correct, that interest rates are likely to stay stable and pull back, investing in, for example, the 12% paper and interest rate starts to fall, then the bond should be able to trade at a premium, which means that if you have to sell it, you could sell it and book a profit.
Yeah. All right, Alex, I hope that is helpful. So let me see if there are any other questions here from the chat. Well, no, I think there was one, but it was answered by the community members. Thank you for that, guys. So in terms of the other questions that I have, I wanted to ask you, let's say the bond is for 3 years. So what does the next 3 years look like for Mayberry Investments Limited?
So let me be clear, there are 4 tranches. The longest tranche is 3 years. So, I believe from memory, there's 13, there's 18, there's 2 years, and there's 3 years.
Yes,
so
correct.
I believe that the best value is the 12% for 3 years, but you do have a 9.25, I believe, for 13 months and a 10% for 18 months, and it's secured. As I said to some friends of mine, if you have $20,000, I challenge you to get a return like this anywhere else in the financial sector. You know, and I mean, I don't even have to get into what your normal return for $20,000 is usually is, you know, so the value is there. So
well, so I was asking more from the perspective as to the outlook for the company in the next 3 years during the period of the bond offer.
So outside of the bond offer, and again, I've alluded to it. You know, our view is that, you know, we saw and we analyzed that the main drivers to the increase in inflation was because of the supply chain disruption. And, you know, when we did research, we realized that even though it took 3 to 4 months to shut down the factories, it was going to take 2 to 3 years to get them back up again. Plus, you're going to have to work overtime to get the efficiencies back in place. And, you know, that's what has kind of driven a lot of the inflation. What we're now seeing, and just using a simple example, you know, 3 months, 4 months into COVID, you know, container prices, the price to rent a container and ship stuff, you know, jumped from 2,000 US, 3,000 US to 26,000 US, you know. And so now we're actually seeing those prices come back down. In some instances, they're south of 10,000. They're probably back in the $3,000 to $5,000 range. So there's still more to go. But as you can imagine, if you have those prices starting to collapse, it must impact inflation in a well, it's negative for inflation, positive for us. And at the same time, when this was happening, interest rates across the board, so for example, in Jamaica, our BOJ signal rate was close to zero. It's certainly less than 1%. So what you have is, at this point, you have the key drivers, as I explained, the cost of that coming back to normal, but at the same time, it's coming back to normal, but your interest rate now is 7-8%, right? And yeah, might have come in a little hot. The reality is that we have ratcheted up interest rates. We're seeing supply chains issue come down. We're seeing other elements of inflation starting to come back into line. Let us pause a bit to see how these things impact, because raising interest rates has a lag effect. And another example of that, you know, is that even though they've raised interest rates so many times, you've not seen, for example, mortgage rates jump as quickly. You know, so mortgage companies, some of the lending rates they've held them trying to see where we're going. And the reality is that some of those institutions might want to increase mortgage rates some more. You know, so in pausing, it allows the central bank to look on these lagging indicators to see how quickly they're coming online. And, you know, probably you might see where they pull back. We don't know. We'll find out in the next 3 months. So we think, you know, once those things start happening, we can go back to some amount of moderation. You'd have seen where, for example, the stock market has been in a gradual decline. And I think that coming back to the same PE conversation, there's an inverse relationship between your price earnings and interest rates. So when your interest rates go very low, you will get a significant increase in your price earnings multiple. But the reverse is true. Interest rates have started to go back up. And you're seeing where there's an erosion in the PEs for certain types of companies. And as the results come in, people are reassessing, you know, do I still need to be paying 20 times for company X? Should I drop company X PE from 40 times now to 10 times? You know, so I think that's where the market is trying to assess. They're looking on the numbers because, again, your PE is a signal for a variety of different things. So once you have determined what the average market PE is, then you apply a discount or premium depending on different factors. And some of the simple factors are, if you have a company that is growing very well, then you would apply a higher PE to that company because the growth prospects are higher. And obviously the converse is true. If their growth is lagging and they're declining, then you would want to apply a PE less than the average to that company. So you see the market going through and making these changes. And, you know, so we have to look on and say, okay, fine, how do we value companies today? How do you get the right value for companies? Because it's not just a matter of supply and demand. You have to start looking on company earnings. And that's why you might see some companies starting to merge, or some people trying to acquire more companies inorganically, because they realize their organic growth is slowing.
Yeah, agreed. So someone wanted to clarify the date, because I believe their summary document said Thursday, December 2nd. So they wanted to just be sure if it's, because Thursday is December 1st. So they wanted to know if it's the Thursday or the Friday, the opening date for the offer.
I think it's probably a typo. Based on information in front of me, I think we got our final authorization on the Friday of last Friday. So the opening date probably would be this Friday coming. But I'll look into it, and if it needs clarification, we'll make the public clarification. But usually, if you're aware of the behind the scenes machinations to get a prospectus out, you get to a point where you expect it today, and then there's some issue, and it probably lags into another day. But I'll check and verify, and if it's something that needs further clarification, we'll definitely clarify.
Yeah, I think in this case, I think you're right there. The opening dates, there's a summary document, which I believe was excellent, by the way. That summary, I think it's easier to give persons an overview of the offer.
Yes.
It does say Thursday, December 2nd, so I think they just wanted to be sure. So thank you for that. I'm checking to see if there are any other questions. Elaine is asking if there are plans to join the banking sector.
Sorry?
Elaine is asking if there are any plans for MIL to join the banking sector.
No, I think there are enough people in the banking sector. We think there, on a serious note, we still think there is significant opportunities for growth in the era that we're in. And as I said, it's evidenced by this bond IPO. The success of this bond IPO has now set the stage, for Mayberry to get significantly more funding at potentially cheaper interest rates than I would get from other sources of financing. So we can become much more aggressive. And, one of the reasons you see us doing this now is that we think the outlook is pretty positive. So again, you've heard my thesis. We expect interest rates to moderate and start to fall. And I think when that starts to happen, there are going to be significant opportunities along the way that we can take up, So, and that's just in one part of my business. So right now, we don't have our eyes on the banking sector. And again, the fundamental reason for that is, we think there's enormous opportunities in the ecosystem that we operate in now.
Okay. All right. Elaine again is asking, will MIL be joining the trend of not paying a dividend? I'm not sure. I think he's asking if you're going to be paying a dividend.
It's not a trend, Elaine. Sometimes we simplify a lot of things, and I spend a lot of time, where possible, trying to explain and educate people. The decision to pay a dividend is usually, so the process is management would recommend or not recommend a dividend to the board for approval or not. And that fundamental management recommendation is based on a variety of factors. And the main thing is the use of cash. So if a company, so like earlier when somebody asked if Mayberry was going to acquire something, right? If I was going to acquire a business and it was around the time I would pay a dividend, would it be prudent to pay out a dividend of X amount of millions of dollars and then turn around and raise capital to acquire the company? You might decide, hey, let me hold on to the dividend because I'll use it as part of my equity to buy that company. So what has happened, and it's one of the things I say to people, there's some people who buy into a company at a particular point and make the assumption that things will not change. So there's an analogy we use that trees don't grow through the sky, right? They get to a point, they've exhausted their growth rate, they're just a mature company, right? So when a company starts to change its profile, you have to be aware as an investor as well. So without knowing specifically which companies you're talking about, you know, if you had properly analyzed their balance sheet, you probably would see that they need cash to do some other things, you know. And you know, once you accept and at that point, I guess the question you'd ask yourself is it in my best interest to get a dividend that probably gives me a 4% yield, or is it better for the company to retain the cash and maintain their 20% growth rate? Right? So those are some of the questions you have to ask yourself.
Gary, I like that answer because it's one of the things that we talk about in our community group often. I think some investors would say to you that they would take the dividend because that's for them and not the growth of the company.
Yeah, but again, the point I'm making, and sometimes this might come across harsh, which I've been accused of from time to time, but if you want the dividend, then sell your investment in that company and buy an investment in a different company. Don't conserve the people. You understand?
Fair enough. I actually think that's fair. That's fair. All right. So sorry, I think you paused again there.
I'm back again.
Yep, you're back again.
Yeah. So
I agree with you.
Right. Yeah. So if the profile of the company has changed, right? You know, the only question you really should ask yourself is, you know, Mr. CEO, I've noticed that you have not paid a dividend. Can you explain? They give you an explanation. When you hear the explanation, you have a choice. You can sell, invest in another company, and when that company comes back into a profile that fits you again, you can reinvest. But to close the point and answer the question, Mayberry's dividend has been on an increasing trend for the last 15 years, and I expect that it will continue.
Great. Thank you for that. Limitless Podcast is asking, would you consider a share buyback?
Again, a share buyback is a question of, you know, return. So when a company does a share buyback, the signal the company is sending you is that they think their shares are so undervalued that buying back their shares is a much better investment than invested in the core business of the company.
Yeah.
Right. So again, I don't think Mayberry's stock has gotten to a point where, you know, we need to conduct a share buyback at this point in time. It still has a certain amount of value, or more importantly, the opportunities that we see out there are so much greater for the use of our cash than to fundamentally buy back our stock.
Yeah. All right. Kish is asking, what would be the tax rate for investors who are non-residents in Jamaica? I believe the prospectus said that the offer is geared for Jamaica, right?
Yeah.
All right.
But once the bonds are acquired, once the bonds are issued, you can buy the bonds on the secondary market. But again, I'm not a tax advisor. You'd have to speak to your tax advisor, because depending on where you are resident, double taxation treaties can fall into place. And the double taxation treaties that Jamaica has with several countries vary from country to country.
Okay. Agreed with that. Kish is also asking if he's asking about default here, but you would have addressed that already, Kish. Right. Gary gives his assurances that there will be no default. So,
I can't give you an assurance. Anything can happen, but it's not expected. What was his question, though?
He was stating that if the bond coupons are not paid quarterly, then that would be a default. That's what he was saying.
No, it depends. It depends. Well, if he's asking a specific question about our bond because we're paying the quarterly, it's fine. Mm-hmm. But within the prospectus and any other trust deed, they give a breakout for how those things occur. That's a different lesson for a different time in terms of how you work out bonds in default, etc. But at the end of the day, the base on the capital, the size of the capital base of Mayberry, the amount of monies that we're seeking to raise is a percentage of that. And, you know, because I've seen where this is like the second type of question. Mayberry has one of the largest capital adequacy ratios in the industry. What that means is that we have a significant capital buffer. That's why we can raise this amount of money to the public. And, if you read the fine print, whilst we're going for $1 billion, based on the size of our capital, we could take up to $7 billion if we need to. Because we have one of the lowest leverages in the financial services sector space. And again, that's a function of how our level of conservatism, and based on my capital, based on the size of my capital base, I can put So we've been in business for over 35 years, and we have seen Jamaica go through some tough times, some good times, and we know how to manage in environments like this. And just to give you an example of the level of conservatism that we have at Mayberry, the size of MJE, which is one of our subsidiaries, right? MJE has about $22 billion worth of assets. And the total debt in MJE is around $3.5 billion. As explaining to an investor of mine the other day, and because we understand the vagaries of the local stock market, I don't know if you remember, just before COVID, when COVID hit, within 2 weeks, the JSE fell by 30%.
Yes, I remember.
In those 2 weeks, the values on our portfolio, the value of MJE fell by $6 billion in 2 weeks, right? So at the end of the day, we have relatively low leverage. So even though the value of the portfolio came down from 22 billion to around 15, 16 billion, right? The debt load is still $3 billion. So you're still over 5 times with the value of that debt. And that's how we run our business. We run our business with significant buffers, because we've lived in a Jamaica where interest rates can move from 11% to 120% in a 1-year period or a 2-year period, right? Back in the whole FinSat days, etc. So, being around for 35 years, you've gone through FinSat, you've gone through the 2008 credit crisis, you've been through all of these situations, hurricanes, etc. And if you're running a business in this space, you have to have a certain level of conservatism, because anything can happen at any point in time. And, we have depositors' money, we have investors' money, and we have to take care of it. They don't really want to hear a story. They just want to know all is well.
Yeah. Agreed. So Marlene Taylor is asking, is there a rating for this bond?
There's no rating at this point. It's something that we can look at. So the bond is secured. And you can also run your analysis on our balance sheet to verify most of the stuff that I've been saying, the debt to equity ratio, etc., etc.
All right. Let me see. Elaine is saying he's looking forward to a dividend yield of 10% from MIL.
Me too. Probably that's why he's asking for low PEs. I don't think there's any stock in the market that's giving a div yield of 10% at this point in time.
Nope. I've always wanted to see it. I would love to see it become the norm for dividend yields to go higher, right? So, yeah.
Well, remember, usually for you to get a higher dividend yield, the price of the stock has to fall materially.
Yeah.
So it comes back to the PE question. Your stock has to fall so low that the dividend you're paying, you're getting a 10% yield based on the price of the stock. And usually if that stock gets to 10%, you might also have a buy signal for that company as well.
Yeah.
So that's what I'm saying. People might ask certain questions and don't look on the ramifications of what they're asking about. So a div yield of 10% also suggests a particular macro environment, and we can go into a whole bunch of things that might be happening that's going to create that type of scenario.
Yeah. Well, for me, it's really about so this is my personal stance now, that I'm not speaking for every member of our community or anything like that. I just think that if you're going to pay a dividend, it should be an attractive one. I think if it's between, let's say, 1 to 3%, I don't consider that attractive. I think it should be based on the price does affect the yield. So I do agree that based on where the company is, to me, it would almost be better at times to focus on growth and expansion rather than a dividend that is not going to be considered worth the fees to get the dividend if you were interested. So that's kind of my personal perspective. So I'm on, this maybe personal.
But the problem, as I said, companies morph. So a company in a growth phase is not likely to pay you a significant dividend because they're growing.
Agreed. And so that's fine. Yeah.
Right. So it depends on the type of investor you are. So if you want a strong dividend yield, then you can look at a company like Carreras. It's a mature company. They generate significant cash, no debt. They are owned materially by a multinational corporation who's trying to take their money out. So the dividend yield there is pretty high. But the growth in the stock might not be what you want, right? On the flip side, you could have another company that gives you a high growth rate. You're seeing growth in the stock, but you're not getting a high dividend, And, that's one of the reasons, full disclosure, Supreme Ventures, of which I'm executive chair of, and is also an MJE, that pays out 90% of profits. And there was a time where, they were just generating cash. No, they're growing and they're also paying out dividends. But, that is very rare to see a stock like that. But fundamentally, our market is changing, right? And, you have to define where you're going to be as an investor. You can't just throw a dart and say, hey, I want a 10% div yield, I want a 30% growth rate, and it just magically appears. You have to look on the company, you have to look on the industry the company is in, and you go down the road. So would you invest in a media company that's been around for a while and expect 20 or 30% growth per annum? No, because you have shows like this that you can put on that will attract the audience for a fraction of the cost of what a traditional media company will do. And there's several other examples that you can hold on to. But as I said, make up your mind. If you want high dividend yields, there are companies out there that will give you. If you want growth, there are companies out there that can give you. But it's usually rare to get a combination of both.
Yeah, agreed there. So Marlene, this question in terms of which would get the 12%, that would be for the tenure of 3 years. So that's tranche 4. So it's really about a time and not an amount. All right.
Yes.
Right.
So I think I touched on it before. There are 4 tranches of 300 million each.
Yeah. 1.25 billion each.
No, it's 1.2 billion overall. But there are 4 individual tranches of 300 million.
Okay.
Right.
All right. So I think that's it. I'm not seeing any more questions. I'll ask you, Gary, before we close, and thank you so much, by the way, for agreeing with this, agreeing to meet with us. I think we've gotten a lot of value from the insights you've shared with us so far. I'll ask you, if there are any final, comments that you have to potential investors in the bond, and any other comment that you'd like to close out with.
Yeah, sure. I mean, first, thank you for inviting me. I think you'd have gotten more value. You told me it's 30 minutes and we're about an hour out. So you double up your value. You double up your value, brother. All right? It's a good deal for you.
Exactly.
But at the end of the day, we put bonds out based on surveys and responses we get from customers and potential customers. And we have put this bond IPO out there because we think there's a space for investors to invest. And I would implore you to take a look at it, speak to your advisors, and invest. Yeah, it's a bond IPO, but an IPO nonetheless. And, we try to get out there, get what we're looking for, and go about our business to make money for you. So investigate it, go to your institutions early. If you like it, make the investment. Because it's the first of its kind for a financial services company, there might be hiccups. So I advise you to go early, work out those kinks so that the monies flow seamlessly, and we go down the road. We think that there's great value there. Obviously, when we do it a second or third time in the future, it'll be much easier. So the headache of setting up that account, whether with us or through your other partners, it'll just be that, a very short headache. Once it's set up, you have now been exposed to this area. And so once we start to do more of these type of things, it's just a matter of just transferring funds. So again, please speak to your broker, speak to us at Mayberry. We're here ready and waiting to answer any questions. And we are happy to be trying to work for you. Trying in the sense of the people who haven't invested, but wanting to work for you for those who do. And, we'll make money together and we go down the road together.
Yep. Great. Thank you so much. Elaine is saying that you're welcome to join us on your next quarterly report for review. So he's referring to a service that we provide for companies to host their quarterly earnings call. But I know Mayberry does excellent weekly calls and so on. So,
well, we actually have a similar program. So we're in the same space, So, we host all of those calls, etc. But at the end of the day, even though we're competitors, we can collaborate where it's possible to collaborate. So, we look forward to that.
Sounds good. All right, Lance, I think this one is for me. So you can join the community. There'll be a link in the description for a Telegram group. Thank you for asking for that link. Our community is up to about 2,400 members now. So
wow, congrats.
To join us. Yep,
nice.
Thank you. I think we're largest in the space, so it's been growing. And we actually have a conference coming this Friday where we expect even more persons to join.
Great, good work.
Thank you. All right, so I think I'll take the rest of these questions. Thank you so much, Gary. Really, really appreciate it. Thanks to your team as well for being so extremely responsive today. It was a pleasure working with them. And all the best for this offer that you have out.
Thank you. Thank you for the offer, and I look forward to your application.
Okay, take care. Take care.
Bye-bye.
All right. All right, guys. Thank you so much for being here. So let me answer some of these questions here. MH, you can apply. Gary did confirm that it will be available on Moneyline, so you should maybe check tomorrow and see if it's there. Yep, agreed, Elaine. Follow Learn, Grow, Invest on all social media platforms. Register for our conference. It's www.learngrowinvestconference.com. It is this Friday. It's Friday and Saturday. It's going to be free, but you have to register in order to get the link to attend. So www.learngrowinvestconference.com. I'm sharing the link on the screen now. Let me actually just share the conference information since we are here. Let me just do that. I will say, well, while I'm trying to bring this up, it is an offer in general, this bond offer that I think you should definitely take the time to go through. For those of you who are interested, as I said, in these, preference shares, bonds, etc., it's definitely worth looking at. Speak to your licensed financial advisor and have them advise you carefully and according to your personal goals. So I'll just say that. So I hope that everything that Gary has mentioned has helped you to make a more informed decision as to what you should do. So I just wanted to add that before I share my screen. And I have to mention, by the way, this website was designed by Renee. So special thanks to Renee for designing the conference website. So you can click this link to register. So we're going to have Julian Robinson being our keynote speaker. So special thanks to him for day one. And we have, our speakers here. Some names you know, some names you don't, but it's going to be an awesome 2 days. These are the topics that we're going to be covering. Topics such as, money management, debt management, investing, and investing in real estate. Great content. Again, you just have to register. It's 3 days and 15 hours away. These are our sponsors as well. So NCB is on board, NCU, VM Wealth, Grow Financial Coaching, of course, JPS, Easy Payments, and Co-Create. So we definitely want to thank our sponsors. More about them on the day, of course. So please do share the link, send it to persons, WhatsApp them, share it on your social media, just about everything that you can to help us get as many persons as possible. Great, Lanesra, we wanted to catch it, but unfortunately we missed it. So we'll definitely go and check it out on YouTube. Thank you so much. We actually, we'll share the link in our community group when we have it. Okay. All right, guys. So thank you so much. So I don't think we have any other videos this week. But let's see. An offer can just appear out of nowhere. So let's see. But I look forward to seeing all of you at the LGI conference this Friday and Saturday. I pray that you enjoy the rest of your day. Thank you so much for watching, and I'll see you in the very next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-Based Financial Coaching Program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N. Grow Invest.